Microsoft reported after the close today, and it was a great report in my opinion. Microsoft is my favorite of the mega cap stocks, so of the Facebooks, Amazon, Apple, those sort of companies. Definitely love the Microsoft the best, in my opinion. I think they've built the best recurring business on the planet. It's recurring revenue business on the planet. It's just a phenomenal business, and it just keeps growing beyond what you thought was possible for numbers this large. All right, dive in a little bit. And on the very top line, revenue came in at $37.2 billion for the quarter, which in and of itself is an astounding number. But $37.2 billion was up 12.5%. And that beat estimates by 4.2%. Earnings per share line was up 30% at $1.82, and that beat estimates by 15%. So just on the surface, you would think that would be you'd get a bit of a lift in the shares. Shares haven't really reacted too much in after hours here. Maybe we'll get a pop tomorrow morning. I don't know. There could be other more macro factors in the market that could be keeping a lid on it, but hey, for me, if Microsoft's down at all, even if it's up a little bit, that still is indicating a buy to me. This was a really good report. Drilling down on some of the business units, the one that everyone looks towards is the Intelligent Cloud. And the Intelligent Cloud business unit reported $13 billion in revenue, up 20% from a year ago. Specifically, though, within that is this Azure, which is the development suite. Competes, most directly with Amazon Web Services. Was up 48%. So, I mean, that's huge growth. They're clearly catching up. They were a little bit behind Amazon. Some people are saying they're getting right there. They're going to be number one or number two at worst, and they could easily be number one in that space. Clearly, it's growing like wildfire, and it's unbelievable. Now, the next one is the Office and LinkedIn. They call that the Productivity and Business Process kind of business unit, and that was up 11%, 12.3 billion. That's pretty astounding number to me as well. Now, break it out a little bit. They don't say what the Office suite was, but LinkedIn was up 16%. So if on average you put those two together, up 11. Obviously, the Office suite isn't quite that much, but the Office suite, I mean, this is a 25-year-old product at this point. But what they've done so well with that product is that they've turned it into a recurring revenue model as opposed to a buy it one version and hold on to it as long as you can. It's a recurring revenue model. So I think they've done a really good job with that one too. Even then their legacy business is still really, really good. Windows and Xbox is put together called the More Personal Computing. And that was $11 billion, up 6% from a year ago. So not quite as strong, but I've also heard that they're having trouble even building enough Xboxes. Like, they're sold out everywhere, and they're not getting the chips that they need to build these things. So that's kind of interesting. So that could be even higher. And we got the Christmas season coming up for Xbox, which I imagine will be incredible. Okay, looking forward, we have... looking ahead, analysts expect Microsoft to do $1.60 per share in the current quarter and $40 billion in revenue. That's pretty incredible. Still don't have any guidance yet as of the time I'm shooting this, but as far as I'm concerned, I can't ask for anything more than that, unless the guidance is absolutely terrible, which is not going to be. It's recurring revenue. They're doing quite well during this COVID. Like, everything is really kind of in their favor. Of course, we have to take a look at the model. That's what we always do, and remind ourselves, what it looks like on a return on capital basis, and it just keeps getting better every quarter. So let's pop over there. And there you have it. And I want to point out to right around 2013, 2014, return on capital was actually going down a little bit, but it was right around there where they went to this this cloud type of business model for Office and everything. And there was a bit of a time where it had to actually get worse. The business had to get worse before it could get better, because as you go off of charging $500 or $600 for Office Suite and a new release, you're going to charge $100 a year forever. So on a new release, the revenues would go crazy, but then it would die out. And they wanted to get away from that, and that took a bit of a transition. But now look at how this transition is actually panning out. So it went down to 15%, also a very good number in your worst years, 15%. And then it's just building it slowly but surely back up to 21%. Most of that's recurring revenue. So we can put in, you can almost put in a 21% return, just forever. Well, that's exaggerating, of course, but I put in a fade down to 10% in the long run, and we still get a $248 stock. Let's just try 12 instead of the 10, suggesting that they earn a 12%. 40 years from now is how the model works, and that's still worth 280. They could still be doing 20%. They really could. It's that good. At any rate, in terms of how these numbers look versus the other big ones, as I said, this is my favorite of the large mega caps. So I can assure you the numbers that we're showing here are, in terms of the model and everything else, they look as good or better than those other mega caps. I can't complain about this earnings report either. There's just a lot of good things. As you can tell, I'm quite positive on it, and I have been for a long time. So there you go. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.